A lot of the time, people will start a business and they don't understand the different models. There's sole trader, there's trust, there's company, there's partnership. And each one of these has a different tax consequence. Hi, I'm Andrew Jeffers and this is the 2-Minute Accountant. When you're starting your business as a sole trader, the tax works around you as an individual. So as we know, in Australia, we're on a marginal tax system, which means, don't hold me to this, from about 0 to 20,000, it's 0. From 20 to 40, it's 17. From 40 to 80, it's a different scale. And from 80 to 180 and 180 plus, it's all a different scale. So when you, as a business, as a sole trader, earn over 180,000, you get taxed at the top marginal tax rate. So when you start a business as a company, as opposed to a sole trader, or if you've moved from sole trader to a company, companies get taxed at a flat rate. Now, if you're a small business, which is now $0 to $10 million, used to be 2, you get taxed at 27.5% of your income. And that money can stay in the company and only be taxed that amount. You only get taxed extra when you start to take the money out as an employee or as a director. So as a sole trader, you get taxed on your individual tax levels, but as a company, you get taxed as a flat rate. I know what you're thinking. You start a company and you say, Andrew, how can I get taxed a flat tax rate? What, do I get double taxed when it comes to me? Through bonuses, through directors' fees, through wages, or even through dividends? But the fact is, we live in a country that doesn't allow for double taxation. So that means that if we get taxed in the company a flat rate of 27.5, and then we pay ourselves some dividends, and we're on a higher tax rate, we only have to pay the difference. Now let's also say that we happen to be paying ourselves low income that year. So if the company pays at 27.5, and our personal tax rate's only on 20, we actually get a refund. The point is that if you're starting your business, you need adequate planning and preparation. You need to understand that there is a seesaw between the costs involved in starting a company and some of the benefits or the flexibility in terms of the way it's taxed versus the cost of starting a sole trader, but then the rigidity in terms of how you're actually taxed as a sole trader or a partnership. So what you need to do is go and get some proper advice. And if you need some help, jump on our website and have a look.